Joining me to discuss SureVest CEO Rob Luna. All right, let's start with this, guys. I'm going to talk about steadfast rules for buying stocks that are down in down markets, because people, obviously, this is what you want to do. We want to go into next year and take advantage of the carnage, but this year, any attempt to do that mostly has been a mistake. Rob, what are your steadfast rules?
Well, look, I mean, at the end of the day, Charles, you've got to buy quality over the long run. And if you look at stocks over the long run, you get 9 to 10% returns. Why is it not 2 or 3% like CDs? Is because you have to endure years like this, and that's the volatility. Stick with quality. You just talked about retail. Wayfair, that's a stock hasn't been doing well. A company like Restoration Hardware, though, they are dominating. Great products, great service, great company. When you get a chance like this to buy those names down 50 or 60%, that's when you step up and do it. Don't start digging through the rubble, trying to find the heavily most shorted, hoping you're going to get some lottery tickets. Stick with high quality, stick with themes that you can have conviction in during these hard times.
I want to talk about the market overall. Obviously, all eyes are on the Fed, right? So let's put that aside, because I actually think it's going to be earnings surprises that create the big moves. In fact, since the end of the official earnings season, since earnings never stop, 248 names have posted results, 72% have been on revenue, 74% have been on earnings. So the kicker, the average gain for that day, 2.26%. I think this is the template going into next year. I'm curious as to what you think will be one of the movers for the market, other than the Fed, that can maybe spark a turnaround. Rob?
Yeah, I mean, I actually agree with both David and Scott. I think they made some great points. And look, it is all about the Fed right now. But if you look at oil prices, if you look at housing starts, it's hard to believe that we don't have peak inflation right now. I think we actually put the bottom in the market already. We're really just chopping around right here. If we can get anything constructive out of the Fed at all, watch out. I think this market's getting poised to rally.
Hey, guys, real quick, I started this segment off talking. There are two names I think that are going to be imperative with the broader growth area, Apple and Tesla. Anyone buying any of those names right now? Rob, what are you buying?
Yeah, I'm not going with either of those two. Not that they're not going to have good years next year. I think they have a good chance, but they haven't been beaten up enough. Amazon, Google have been down over 50%. Names I like, though, Disney, great comeback story right here. The name I've talked about here for the last month, a victim of tax law selling. If you're looking for one name I think you can easily double next year, Farfetch, FTCH, under $4. That stock could actually be bought out by Amazon. A lot of opportunity, a lot of overhead. If you're willing to take on a little bit of risk, I think that could be your biggest mover next year.